Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, the stock market seems to be happy with so-so earnings reports for a while now, even given the fact that there's very little profit growth. How long can that last? Well, we're going to see if our panelists can shed some light on that. Research Director Shiraz Mian, Equity Strategist Todd Bunton, and ETF Strategist Eric Dutram are with me here this time. And Shiraz, at some point, you have to show profit growth.
That's right. Yeah, the expectation all along in the market has been that, yes, there hasn't been much profit growth, but down the line it's coming. Mm-hmm. And each quarter, that down the line thing keeps getting pushed
Further out,
that's right. So the hope for quite some time was that Q4 is that long promised date for profit growth. The growth rate still for Q4 is on the high side, close to 9%, but it has come down. It's been steadily coming down as the Q3 earnings season has unfolded, down to about 8.9% as of this morning, from upwards of above 10% at the start of the reporting season. But that's absolutely been my case as well, that for the market gains this year to be confirmed, we need profit growth. And there's double-digit growth expected by consensus next year. I have been skeptical of that for some time, but in support of what the bulls have been claiming all along, they say, okay, there hasn't been much growth, but profits are very high. Mm-hmm. In fact, Q2 was an all-time record in earnings for the S&P 500, and Q3, while not an all-time record, will be very close to that Q2 level if we continue on current trajectory. And then Q4, even if it comes down quite a bit, will be a new quarterly record. So we don't have growth, but the overall level of corporate profits is quite high. And as long as those don't start deteriorating, investors seem to be okay with that, particularly if the Fed continues to remain on the sidelines.
All right, Eric, you say it's more of a sector-by-sector situation.
Definitely. If you look at financials, for example, these have been kind of leaders of the market for a while, but we've seen very sluggish revenue growth. I think actually revenue contraction year over year for financials. But if you look to like big tech, and this has kind of been a weak sector for much of the year, but we saw some results from Microsoft, Google. These were very strong. We saw some great stock price increases from there. Mm-hmm. And then transports, more of like kind of a traditional sector. FedEx, I think, is up almost 15% in the last month. The transport ETF, IYT, is up pretty strong over the past month too. So I think we're just seeing a little bit of rotation. And as Shiraz was saying, profits have been strong, so we might not see as much growth. And it might just be about companies kind of firming up their bottom line and saving profit margins.
Todd, it's a QE party still in the stock market, so the Fed meets later this week.
That's right.
You look for that to be a non-event?
Yeah, I do. The odds of a taper, I think, are very slim. If you look at the September job report, it was very weak. Not only that, you had the government shutdown and the debt ceiling thing. So the Fed's going to be very accommodative, and I expect that they meet again in December. I really don't expect the taper until sometime next year.
All right, so let me ask this then. With no emerging impetus for any change in market policy, any shift in market policy, is this rally in the market going to continue being as robust as it's been through the end of the year? Or is it going to just kind of coast along because it sees no reason to be robust? Eric, you say that's more of a sector-by-sector issue as well.
Definitely. We've seen this already just with the earnings, and then also, if you look ahead to the fourth quarter, there's some stocks in the consumer space that are, looking pretty unfortunate. But then if you look at other sectors of the consumer level, like, in the gaming space, some of these have been really strong. So I think even in sectors, it varies on the industry. So there's really no good overarching trend, I think, for the market right now.
Sure, as you take the coast along approach.
Yeah, I would say that what has worked in the recent past should, in the very short term, I tend typically to look long term. But given the specificity of your question, I think since the Fed is expected to stay on the sideline, I agree with Todd in his outlook on the Fed. Then what has worked recently should continue to work through the end of the year. To Eric's point, I think you have to go sector by sector, and even within sectors, by industry. So yes, transportation is doing good. Within the broader technology, more consumer-centric, social media, internet type, e-commerce type of companies are doing better. The old line technology, the IBMs of the world, the Oracles of the world that are dependent more on corporate spending, they are not doing as good. Industrials are lagging, as we saw with Caterpillar and some of the others. Basic materials are not doing so good, more of the econ sensitive. So and that's what we've been seeing over the last 4 to 6 months as well.
Okay.
And that should continue over the next 4 to 6, 8 weeks as well, till the more greater clarity and visibility on what the Fed is going to do starts getting internalized in the market, and then they start paying attention to this lake of earnings growth that we were talking about at the top of the segment.
So it seems to me that both you and Eric believe it's a stock picker's market. Todd says not really.
Yeah, I still think it's kind of, the situation of a rising tide lifts all boats, or at least most of the boats. And definitely there are going to be sectors that outperform. There's no doubt about that. But I think the market is just people chasing profits or chasing gains. And people see the stocks at all-time highs, so then they think that's the time to get in. And they keep pushing this thing higher. And like I said, yeah, sector by sector, there are going to be outperformers. But overall, I think we see overall higher market throughout the rest of the year.
Yeah, you do need to be in the fancier boats to.
Well, that's true, and I think. Well, I think if you see growth, the market seems, hungry for growth, and even if it's growth that's 5, 10 years out in the future, they're willing to pay for that now.
That's right.
All right, we'll leave it there for time. And opportunities are out there as far as stock picks are concerned. And in our next segment, they're going to share theirs with you.